and what's happening with the correction and why it's so many people are freaking out. So I'm looking forward.
FYI, we are going live on YouTube also, so we can welcome our YouTube audience.
Yeah.
Hello. And I am Tara Umverzat from South Bay Financial Partners, and we specialize in family offices and for under 100 million net worth and in young adult professionals, freelancers, couples, and people getting started. So that's sort of our niche.
Perfect. And so in today's call or live, one of the things, Tara, are we live on Zoom and all these other things that I don't even know how you're doing?
We should be live on YouTube and on Instagram. So hopefully we are. And I actually can never figure out how to tell if we are live or not. So I'm just assuming that we are. And I am going to try to find the live stream in YouTube so that if people are making comments and stuff, that we'll see that. But I'm not seeing that right now. So maybe that's not happening.
Awesome.
But it sounds like you have extra sound. Do you have something that needs to be turned down?
Maybe I can turn this down. Let me see. Am I a little bit better?
Yeah, that's much better. Can you hear me?
Yeah, perfect.
Okay, I think we're good. Well. Okay. So did you introduce yourself, Silvia? Sorry, I was doing technology.
Don't worry. So my name is Silvia Manent. I am a financial advisor at Manent Capital, where we focus on really young 30 to 40-year-old clients and help them build their wealth. So if you're someone who is very smart and very successful, but very confused, we are your people. So awesome.
I did get Instagram, so I could see that you were seeing me like grandma. So I tried to adjust it a little bit. Still working on that camera thing, but anyways.
Sadie, can you let us know if we're like our sound is good? I know I have like 70 screens here. Hi, Sharma.
So we wanted to talk about investments, and today is sort of this week has been an interesting week with the Evergrande fiasco that happened, with the market that dropped today, and the other one that I was starting to talk about was also the court hearing for, and I can't think of what the name of the blood testing company that skyrocketed. Theranos. So there's a whole lot of interesting things happening in the markets today. And the Theranos thing, what strikes me about that is that the question in the court right now is, did she fake the numbers, or was that just normal, entrepreneurial, like we're giving projections and we're going to do great and we're going to make millions just like Elon Musk. But then that also begs the question, like, it fell through for her, is it going to fall through for other companies too? And how do you value companies that are startups? Like, you don't know, you're projecting, you have a belief in that company. So it just opens up all sorts of conversations. And what do you want to get started with?
I would love to talk. I mean, we can talk about Theranos. We can talk about Evergrande and the whole fallout and what the repercussions we think that Evergrande is going to have on the global economy. Because I think a lot of people are asking if it's really going to be an issue. Maybe talk about our thoughts, and then we can go to why has the market kind of not severely, but what is driving the market sell-off? What should people be doing? Should it be selling, taking some cash or some chips off the table? Kind of maybe talk a little bit about that. We have roughly 30 minutes or so.
Yeah, that sounds great. And I think that Evergrande is especially interesting to talk to you about, because you are from Spain, you are an international person, an investor, and you've seen a lot that the average American hasn't seen, the US citizen hasn't seen. And one of the things that I think we might have even talked about before is I actually was looking last year at investing in some Chinese stocks, but I always have this question that can you trust the government for supporting or not supporting, and they can actually help a company's price go up, or they could help it go down. And we've seen evidence of both now in the last 6 months. And I think that part of Evergrande is, how much of that was self-made, how much of what that was a Ponzi scheme, really, and how much of it was the government trying to support this growth, and then deciding, no, that's not such a great idea. So there's like a whole lot of things going on in that one.
Yeah. So wait, tell us a little bit about like the Ponzi scheme, nature of Evergrande. And maybe for the people that are on here that don't really know what a Ponzi scheme is, maybe explain.
Okay. Well, I think maybe we should start with what is the Evergrande issue and who are they? So as a Chinese property company, I think it's especially interesting because of everybody who wants to get into real estate and think that you only make money when you get into real estate. And you and I have had discussions about how you can absolutely make money in real estate, but you can absolutely lose money in real estate too. And this is sort of a worst case scenario. So they were a development company that was making housing for China as China's wealth grew, and as their middle class grew and their upper class grew, they were making higher lifestyle condos for people to move into. And they were selling a bunch. So they were just making a ton of money. And people were actually, at this point, I think if you wanted to buy a condo that they were making, you had to pay for one and wait 3 years for them to actually build it, because there was that much of a waiting list. But really what they were doing, what the company was doing, was taking your money and then giving it out as dividends to the shareholders, which the major shareholder was the CEO and founder of the company. So basically funneling money to himself. And he was building the condos with debt. And as long as he had money coming in, he could get debt, he could build it, he could keep it going. This is how I view the Ponzi scheme aspect of this, because basically Ponzi scheme work as long as money is coming in. But as soon as it doesn't, then there's no money to pay the people who have been in it. And so they basically got, liquidity crunch where they
Sorry, I'm
scary. You didn't warn anybody in the house, did you?
I did not warn anyone.
COVID moment. This is what happens in COVID.
Well, we needed good lighting, so I had to go to the bedroom.
But yeah, so anyways, they started using debt to build, and then once it stopped, once the debt, the ability to get debt dried up, and as soon as people stopped paying, all of a sudden the house of cards started to crush in. And so then they couldn't service their debt because they didn't have a flow of money coming in, and so they were going to go belly up. So is China going to save them? Is China not going to save them? And that was what the drama that was happening last week. So
yeah, what do you think? I mean, I honestly think that China has way too much pride to let their system collapse. Like the Chinese government, I know they're very secretive about everything that they do, but going forward, I don't think that they're going to let Evergrande collapse, honestly. My own personal opinion on the topic.
So that's an interesting point. And yes, I think that the Chinese government has way more control over what goes on in their country than any other country in the world. And yes, they are trying to control it. But one of the things that they're absolutely double downing on is that they don't want the super wealthy influence and the dichotomy that's happening in the United States. They don't want that in China. And they started seeing that, and they decided, oh no, we got to put a kibosh on that. And so they've been taking people down who are in those prime positions. And I think for twofold: one is to take some power away from those people, but also to be role models. You don't want to be there. That's not a good place to strive to be. So they're trying to set an expectation for everybody. That in the United States, we do the opposite, right? We put these billionaires on a pedestal and say that everybody wants to be there, to our detriment, really. So that's part of what they're trying to do. And what are they going to save Evergrande? I think they're not. Actually, what I heard that I think is more likely is that they will bail out the people who put money into it to buy the condos so that they can have money, they can get their money back, they can get housing someplace else, but they're going to let Evergrande go because he's one of the wealthiest men. And like, they're on the bad list in the China government right now.
Yeah. Oh, that's interesting. We're going to see that I know that they have on this Thursday, they have a bond payment due. So we're going to see what happens, if they're going to default or what, we'll see. So do you think though, that if they do collapse, is that going to have a repercussion on a global system?
It's going to be interesting. And basically, I think I've said over and over, I feel like a broken record. We are in uncharted territory. Like things are happening now that we have never seen before. We have no idea. And really, where we tend to get in trouble is that we try to fix things and there's unintended consequences that we didn't consider. And that's really that's the domino that starts the crash. In China, I don't know. I think to your point, they're going to do everything they can to save their economy. So I sort of see that they're going to do whatever they need to do to go ahead and have the rich people collapse and the rich investors collapse. Like they don't care about them, but make sure that the middle class and down are taken care of and made whole.
Yeah.
So I think that's going to be their emphasis. But I wonder, they haven't really had enough power or enough influence or a big enough project like this that are they going to fall into the unintended consequence problems that most governments fall into?
Yeah.
I don't know.
Well, we'll see. We're going to wait and see until kind of see what happens. So Stuart says, I think there are American companies heavily invested in Evergrande as well.
And invested in our real estate here. So like, yeah, it's very much interconnected, China property and US property. So yeah, is it going to affect US property? It very well could, who knows?
Yeah, that's awesome. So yeah, Tara, should we deviate the conversation to kind of what's happening now and how people should be considering their portfolios given the volatility of the market?
Oh, yeah, that's a good one. So what's your answer to that?
I mean, there's a couple of things. So, I mean, I can guess, right? So number one is the fast pace of interest rates. So we saw in June or so, it was we had interest rates 1.5 decreased to roughly 1.2 midsummer. And now we're starting to see a huge pickup to almost 1.6%, right? So as higher, for those of you that don't know, is the higher the interest rates, the worse it is for companies because it gets more expensive to borrow. It gets more expensive to take on, to pay back their debt. And especially for, Abdu, and then for those that are, especially for those tech companies that have a significant portion of their valuation based on like longer term views, it's very, very interest rates are very important. So what's happening really today in the markets is driven mostly by interest rates, really, number one. It used to be a lot of the times people were speaking about the Delta variant, but I was talking about Tara this earlier, that if you're looking at Google Trends, right? Google, whatever people are searching for on Google, that can be used as a leading indicator. Because usually what people will do before they buy something, they'll Google it. So you can kind of tell what people are thinking or what people are doing based on Google Trends. And this is all public information. Anyone can access Google Trends. So one of the things that we're looking at is, okay, Delta variant. How many people are concerned about the Delta variant? I know in August, we had a huge spike, everyone Googling, kind of canceling their plans because of Delta. But now we're seeing a huge decrease. So obviously Delta is not an issue on people's minds right now. And we're starting to see people going back to work, going back to the office. Boston, there's no place to park. So a lot of people are starting to, get back to work and stop working from home, especially having their kids back to school. And if you look at Google searches, if you look at like suits and skirt and shirt and things that are, in terms of back to work, those are all-time highs. So you see the consumer, number one, is already planning on going back to the office. Number two, they're planning on spending because they're Googling Halloween decorations, searching. And so the consumer is the vast majority of the economy. So if the consumer is healthy, that tends to, follow by a healthy company, healthy stock market. So I'm paying a close eye on what the consumer is doing. I think the consumer is still very positive. That's why I'm still positive on, yes, there are headwinds like the supply chain disruptions. But to be honest, the consumer is willing to spend, even though prices are, especially at all-time highs. So that's my opinion. But Tara, I know we always disagree, but I love disagreeing with you.
Which is actually what makes this great. But no, I actually don't necessarily disagree. Although I think it will be interesting. And yeah, so I know a lot of people are concerned about the supply chain, and it is definitely disrupting a lot of things, but it's also not disrupting a lot of things. One thing that's interesting, I was talking to a client who makes towels, and he was saying that their factory is having problems getting people to come back and work because they still don't want to come back and work. And so they're scrambling to try to get more employees. But what they're doing also in the meantime is automating and buying, basically robots to do the work, which means that those jobs aren't going to be there if those people want to come back later. So I think that there is going to be some automation happening because people have decided not to come back to work. And so I've always been concerned about what happens when we get to the other side of COVID and all of these people who have extracted themselves because they're parents that have to take care of kids that are at home schooling, or they're afraid of getting COVID and affecting their family. So they've chosen to stay out and wait until it's safe to go back. But is there going to be a job for them when they go back? And is it going to be the job that they're used to, or are they going to have to learn how to run a computer because now their job is 5 of their jobs are gone and it's replaced by one computer that somebody's going to have to learn how to make. So I think there's going to be a huge shift in what jobs are. A lot of people get scared about automation. Yeah, automation. Thank you. And robots and things like that. And I'm not really that nervous about that in that we have never had a time frame where when they stepped up the technology like that, they didn't also step up the number of jobs and the quality of the jobs and the pay of the jobs to be able to deal with that. Where the discomfort comes in is that the people coming back aren't coming back to their old factory work. They need to learn a new skill. And that's an identity shifting experience. And so, the financial therapist in me comes out and says, like, we have to deal with all these people who are going to be in identity crises because they can't go back to doing what they were doing. They need to take a new road. And how do they make that shift in a constructive way? So that's one thing. But the interest rates, I find interest rates so fascinating. And the Fed is increasing the interest rate. But what happens with that is what we're seeing. People get out of the stock market, which is riskier, and go into the bond market. They got out of the bond market because you weren't getting enough yield to make it worth it. And so people were taking on a little more risk, and some people didn't realize how much more risk they were taking on, but they were taking on more risk to get into the stock market to get a return because they weren't getting it on bonds. So now that the interest rates go up, then people come back in. Well, what happens when people start buying bonds? The price goes up, the interest rates go down. So I've been waiting for this moment when the Fed increases the interest rates and everybody starts talking about increased interest rates, but actually interest rates don't actually go up, they go down because now everybody's jumping into bonds. And so quick bond lesson, the price of bonds change in invertedly from the interest rate. So if the price goes up, the interest rates go down. If the price comes down, the interest rate goes up. So that's just a basic thing you have to memorize and feel and learn about bonds. So right now the interest rate's going up, so people are jumping in. And so old bonds, the price is going down, but then as people get in, the price will go back up, and that the interest rates are going to flip. So I think this is fairly short term, this interest rate change. And so all of this activity that's happening in the market, in the stock market, could end up reversing because the interest rates don't actually hold.
Yeah, totally. So agree. Are you concerned? So another thing that's on the table. So we talked about Evergrande, we talked about Delta, we talked about interest rates. Are you concerned about the debt ceiling?
Oh, well, I think that's what the inflation is about. I think we've talked about this before too. I don't know if this audience has heard this, but I think Washington purposely is causing inflation to minimize the debt problem. That, as inflation goes up, those debt dollars are worth less. So on an inflation basis, the debt isn't actually growing as much as we think it is, because the absolute number doesn't matter as much as the relative inflated rate. So I think that Washington is doing that on purpose to deflate the impact of the debt. And the debt is I always say the debt is not a problem until it is. As long as people have the faith and trust of the United States, the debt problem will not be a problem. As soon as that trust goes away, or if that trust goes away, it may never go away. But if that trust goes away, that's when your debt which actually gets back to Evergrande. So, or anybody who's leveraged, you're fine as long as people trust you and continue to loan you money. But as soon as they feel like you're not credit worthy and they're gone, all of a sudden, all that debt becomes a boat anchor and down you go. So that's the risk of debt and leverage that a lot of people don't calculate into their formula.
Totally. I mean, I haven't been. Europe is looking like they're actually making a lot of progress in terms of Delta, and a lot of people have been speaking about it. I'm more of a US based because, and I think we've talked about this before, even though I'm from Spain, I think I know how we work. And I just heard that someone called us the pigs country. So someone said there was Portugal and Italy, Greece, and Spain. So all the places where you want a vacation, you don't want to invest in us because we don't really know what we're doing. So
but beautiful places to visit.
But if you really think about it, I think that one of the misconceptions about people is that you do have a lot of foreign entities in the United States that are on the New York Stock Exchange. And if you look at 40% of the revenues of the companies in the S&P 500, they're foreign. So you automatically, by just investing in the largest US companies, you're automatically getting international exposure without the, accounting schemes or lack of accounting oversight of these emerging countries, right? Like a lot of people have been speaking about China for a long time. I think it's a black box. I've been to China. I've spoken with the China, like they are willing to do anything to really get their companies to the next level. And I've spoken with so many like Chinese entrepreneurs. They're so driven, but that there's like a thing where like they're competing against they're competing against United States companies. And I remember speaking with one gentleman, this was in 2014, and he was like, I don't care how we're going to do it. We just want to beat the United States. We just want to be better than the US. And there's that mentality of when you're hungry and when you're growing, but at the same time, like this can have like serious repercussions if you don't have like serious accounting shenanigans. Like there's too many accounting shenanigans. So I personally like to stick to what I know, what I trust. And I do trust the United States. I don't know how much longer, but
yeah. And I have two things to respond to. One that I think is interesting as you were talking, I'm going to show my age, but in the 80s, everybody thought that Japan was going to take over the world. Like they had it down. They like were just, going gangbusters and they were going to take over the world. Nobody is saying that anymore. So, and not to say that China won't, but I think that that we all have a bias that we think that things are going to continue in the direction that they're going today. And because China's on this super growth path, we think that that's going to go on forever and it's going to take over the US. And the fact is nothing goes on forever. Everything always has a change. When is it going to change? I don't know. Is it going to take over the US as far as world power? Maybe. I don't know. But I think like you, a lot of the world doesn't trust China enough. But the problem is they don't trust us either. And as Ian Bremmer would say, we're living in a G0 world where like everybody is on their own. And then what does that look like? That's actually a bit scary in my opinion. And then the second thing I was going to talk about was, what was the other thing that you talked about? China.
The debt ceiling, Evergrande. What else?
Investing in, international investing. So yeah, that's actually another thing that I've said for a long time is that there's this concept that you have to have, be invested in other countries. And as soon as, I can't even think of a name, but like Pepsi Cola changed their headquarters to Ireland and became an Irish, company. I was like, you know what, this is all fictitious. And back to your point, Coca-Cola is international. IBM is international. Like, frankly, even small caps are international at this point. Like everybody is international. It's not like something is happening there that we don't have access or that there's things going on here that they don't have access to. We live in a global society. And so that where you're headquartered really doesn't matter a whole lot, except back to your point that, are there checks and balances in that country? Is there graft in that country? Is there, and then it just becomes an unknown because like that could help them get ahead. China companies could get ahead, or China could decide that they want to take down all the billionaires. And so now all of those companies are gone, so you just don't know. And there's a lot of unknowns. So.
Yeah, no, and absolutely. So I've always, it might not be the sexiest thing, but I like to stick. And I think being from Spain, like you understand how different people think, right? Like when I was in Spain and I went to school there, we had like a lot of the Germans and the Swiss and all these different people from Europe and from America. And you see there's a huge difference in the way we work, right? And it just is. And I've tried to do like business with some European countries, and it's just a lot more difficult. It's a little bit slower. And at the end of the day, it's like, why? I have a limited amount of resources. I'm trying to optimize. Why should I have to take unnecessary risks and especially when I don't, people don't, unless you're living in that country, like when I read about things that the US market says about Europe, and when I'm in Europe, it's completely different what's happening. Like they don't get it. And people think that you automatically you can know what's going on. You need to really be on the ground. And I'm not on the ground in China, like listening and talking to these people every single day. It's a lot of work. And so a lot of the times, if I speak with my colleagues in China, they don't even know what's going on in their own country because the government doesn't even tell them what's going on. And I remember when COVID happened, I was speaking with a lot of my Chinese friends, and they were like, we literally have no idea. Like, we don't know. We don't trust the government. So I'm like, if you yourself can't even trust your own government, maybe, and number two, a lot of the best companies, even if they're from China or from India, they want to get listed in the US stock exchange. Like they want to get listed here because that's where it's the most clear and compliant. And just this morning, I was talking to a few like Swiss bankers, and they said the same thing. They're like, we have to have a US presence. There's no, you cannot compete. And I think when you're in the US, you don't realize what an advantage you have. And sometimes you have to you try to look for things outside of your home to try to get good deals. But a lot of the times it's right under your own nose.
Yeah. So. But there's also the flip side of that that's starting to come back and bite us is that the United States has used their power to persuade Russia not to do bad things and blah, blah, blah. And so China is stepping in on the financial industry in order to free up cash flow internationally so that people don't get locked up because the United States locked them up. So that actually is not going to serve us well in the long run. How many of those bad guys are there out there that need to stay safe and stay? And actually, we could go into Bitcoin and do a whole Bitcoin thing too, because
I know
this
I
is
think
related
our next
to.
one Bitcoin.
So yeah, next time we'll talk about Bitcoin
And Bitcoin ETFs. I think that's a hot topic.
Yeah. But yeah, so they're trying to find other ways of moving cash around the world so that they're not restricted to the restrictions that the US have, which can be punitive. And that's actually why I get a little upset with the United States when they start using punitive, actions to try to resolve some issues, because that ends up having unintended consequences that we don't want to see. So I am hoping that we get out of this G0 world view and we start having more connection and start like really trying to cooperate, because that's really in all of our best interest to stop being scared of everybody else and start protecting our territory. That's a doomsday kind of thinking.
Yeah. And we just need more transparency and trust. Like you said, right? You lose trust. It's like, I trust a lot of the Chinese companies, but I just don't trust the government. That's it.
and that's interesting because I do think that probably within China, there's a lot of people who feel that way too. And, and a lot of the big companies were definitely aided by the Chinese government, but I think they also understand, and actually they've tested and they've gotten in trouble for testing, their alliance with the Chinese government. You need to be aligned with them or they're going to.
And even India too, there's restrictions for a lot of colleagues in India that they're trying to invest in US foreign companies. They have to go through so many hoops to try to just buy one share of Amazon or Apple and pay just unnecessary fees, where here it's like for free. So it is. Deregulation and transparency are just two things that I'm looking for before I invest in any of these countries. So and
having accountability, which we don't have a ton of accountability in the United States, but we have more than most places too. So it's definitely a start. So I think we're wrapping it up. I think you have another meeting to get to.
I have a meeting with Australia now. So it's 6 p.m. I'm super jet lagged. I just flew back from Spain. I'm hoping to go back to Spain this Christmas or holiday. I have to be politically correct. And
and I'll visit you this time. We're working on that.
We're working on you coming to Spain. So
actually I have this 7-year plan that I'm taking a 3-year sabbatical to Spain, and I'm going to come visit you.
I mean, it's an amazing place to relax and to live. It's the best place.
Beautiful. Yeah.
But if a train leaves at 6, it actually leaves at 6:30. That's the only thing.
You're going to get picky about that? Come on.
No, I was late. I was 2 minutes late to a Swiss meeting and I freaked out. I was like,
I don't know if I told you, when I first moved to California, I had this friend that I had made, and he asked me, Tara, how late does somebody have to be before you consider them late? And I thought it was the oddest question. I just couldn't figure out what he was saying. And I said, well, if you're 1 minute late, you're late, but it's not necessarily a big deal. And he said, yeah, that's what I thought. Just to let you know, in California, like, you have to be 10 or 15 minutes late before it's late. It's just not late. It's not late. I'm like, oh, okay. So yeah, different places have different MOs on what they consider late. So definitely a cultural thing. Even within the United States, we have that.
Totally.
Oh, okay. Well, thank you for joining us. This was fun.
Yeah. Trains in the US are so late. Yeah, trust me, I lived in Switzerland, and it's a joke, especially our infrastructure. Let's see if they pass that infrastructure bill. But
and I'm such a train rider, so like I see this comment about German trains are the best. They are on time in the US.
On time, they're efficient.
Amtrak could be a day late.
They will be gone. Like if you get to a train at 6 in Switzerland or in Germany, like it will be gone.
Yeah.
So
but and a lot of that is because of our infrastructure. We just never put any time or money in it, like in the last 70 years. And I do hope that the infrastructure bill does have a little bit of that, because I am a train lover. And if they were more dependable, I would definitely use them more.
Me too.
Okay, so we will see you later. I'm gonna say goodbye to our live stream friends over at YouTube. And if you enjoyed this, like us, comment, share us, follow us. We are on Instagram, as the Instagram people can see. We're South Bay Financial Partners is on YouTube and also on Facebook. And I'm